Hello, this is Matt on the Moon Lambo channel. Ripple CEO Brad Garlinghouse shared some thoughts about a recent Senate banking hearing. He put out a short thread on Twitter sharing his comments about how, frankly, things seem to be, in a general sense, progressing. If you can imagine, half a decade or so ago, it wasn't very common at all to see anybody in government, especially on the federal level, espousing the benefits or about the crypto asset class, or even talking about it in general. Other than randomly here and there, you'd hear things like, "Oh, nefarious people using Bitcoin to do illegal stuff." You'd hear that type of crap. But now you are seeing it's much more so in the mainstream, increasingly being accepted in a general sense, although people still acknowledge there's a path that needs to be forged ahead to get things sufficiently where they should be in terms of regulatory certainty, let's say. But there are also people that are in government, on the federal level, most importantly perhaps, that just don't get it. And I'm going to highlight one of those cases. Brad Garlinghouse cited this individual, didn't really take this individual to task, but I'm going to. I'm going to break down some comments from this individual and share with you exactly what I think. So this is going to be a fun little Moon Lambo hot jam. But I do want to be clear at the outset, I don't have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything that I say or write. I'm just a simple little Moon Lambo doing Moon Lambo stuff, making videos all up on the YouTubes, because it's a fun hobby. But just to be clear, this is just a hobby. I'm not some sort of guru or something like that. There's enough fake gurus on YouTube as is. You don't need another one, so I'm not going to pretend to be one. Right? But here's what Ripple CEO Brad Garlinghouse had to say. And by the way, this was in a retweet to what was then the live streaming event of the Senate banking hearing that Brad Garlinghouse cites here. And he says, "I'm encouraged by this morning's Senate banking hearing that members of Congress are looking to understand the nuances within crypto. A far cry from just a few years ago when some thought crypto is just a fad or mostly for criminals. I'm also encouraged by bipartisan efforts to provide much needed regulatory frameworks to an industry that is by and large looking to work with policymakers, not against them. As I have said before, all blockchains and cryptos should not be painted with a single broad brush." And so, yeah, if I could say there, and this is one of my favorite things that was always appealing to me in the very early days when I first got into crypto in late 2017, because I saw this stupid little anarchists that were yelling on the Bitcoin side. Not that everybody was like this with Bitcoin, but the down with banks, down with government nonsense. That never resonated with me. Never. Doesn't make sense. It's not sophisticated. It's not even realistic. And then I saw Ripple, recognizing that there are some pain points within the legacy financial system, but working with regulators, being the adults in the room. That was always appealing to me, and actually kind of rare in the crypto space. I mean, there are plenty of people. It's just that when you're talking about over 8,000 cryptocurrencies out there, there are a lot of participants that perhaps shouldn't be here, and I think given enough time won't be here. But that's hey, maturation of the asset class. That's fine. Anyway, Brad continues. "Like any technology or currency, crypto and blockchain can be used for good or bad. To discount the real use cases for billions globally, like cross-border / micropayments, tokenization, instant settlement, transparency, to name a few, because of the actions of a few, is short-sighted. As Senator Warren has recognized, our current banking and payment systems need improvement. Crypto and blockchain were originally created to provide access to those who have consistently been left out. And many companies are using this tech for precisely that purpose." And so it was interesting that Brad Garlinghouse tagged Senator Warren in this. And I don't know what's going on. I don't know, there's something in the drinking water, but she's been in crypto news a lot over like the last several days, roughly. And in fact, this is now the third video I've made where she's come up. The third one. And this is not normal. I don't think I'd ever mentioned her before. Or maybe I had and I just don't recall, but like 3 times inside of several days, that's a little bit too much Senator Warren in my life, frankly. And so she had an opportunity. She was allotted, I think, about 5 minutes to speak, and she asked a few questions to a professor that was at this hearing. And so I just look, and I want to be clear too, like this is nothing to do with the fact that she happens to be on the left politically. If any of you are wondering, that is not why. I'm going to be very critical of her ideas because they're wrong. And anybody that has these types of views towards crypto, I'm going to challenge the ideas. And so it's not about her as a person, of course. And there's no shortage of people on the right politically that have awful ideas, and I've highlighted about crypto, and I've highlighted them on the channel here as well. And so, look, Senator Warren during this hearing, she acknowledges that our financial system needs change, and she said, "quote big structural change," end quote. And she notes that many people tout cryptocurrency as the answer, the big structural change that is needed. And she says the current problem is that our current financial system is dominated by a handful, that's what she said, a handful of big banks that are mostly free to jack up costs for consumers, as well as restrict financial access to consumers and gobble up smaller competitors until they become too big to fail. And so already right here, I'm going to have to pause because she seems to have a fundamental misunderstanding of the problem, and she also seems to not understand, quite frankly, how competitive and free markets work in the United States. Or if she does understand, she doesn't like it. And maybe that's all that's going on here. It's either that or she is clueless, which would be scary given that she's a senator. But look, saying that there are a handful of big banks that are mostly free to jack up costs for consumers. It's mind-numbing that I even have to explain this. Let's talk. We have to talk about free markets a little bit here. And by the way, I am a business owner. I have actual real-world experience. I've owned my own business. I started it with my brother in the beginning of 2010, and we're still running it together. And just imagine this. Imagine we're in a vacuum here, and there's Company A and Company B selling exactly the same product. And let's say there's literally no difference between the customer service or the product itself, any other outside factor. All we're looking at is price. Let's say that they're both selling widgets. One sells the widget for $10. That's Company A, and Company B sells the same widget for $5, so half the price. And there are, again, no other differences whatsoever. You'll get the product at the same time, customer service on par from one company to the next, no differences. Who do you buy from? You buy from Company B because it's half the price, right? And so I want to be clear. It is not such a thing that companies can charge whatever the hell they want, because in free markets that are competitive, there will be somebody that says, whoa, you're charging more, I can charge less. Now think about this. There are some companies that charge more than others for the same product. Well, my gosh, they are greedy then, right? My gosh, these terrible businesses, what are they doing? How are they taking advantage of the customer like this? Look, nobody can pry the money out of the customer's hands into their hands. Maybe there are other reasons that make it worth them. Maybe it's the case that if they spend a little bit more on this product, maybe they get a warranty for the product. Maybe they get better customer service. Maybe they get the product sooner. It can be shipped faster. Maybe they're a fact. And so like, oh, this is worth it to me. I'm going to pay for this purpose, right? And then for everybody else that maybe doesn't care about those things, they'll pay less money. And so to pretend that there aren't competitive forces here and that banks are just outright scamming people is completely nonsensical. This does not make sense. This is not how businesses operate. And then so you could even cite things like, for instance, overdraft fees or ATM fees. And my understanding is that these are profit centers for the bank. I mean, if a bank charges you an overdraft fee, or they charge you a few bucks, whatever it is, $3, $4, $5 for an ATM transaction, you know that their expense was nowhere near that, right? That is the case. We can acknowledge that, right? But again, a couple things. Nobody is forcing you to give your money to them. And if you can find a bank that doesn't charge overdraft fees and doesn't charge you to use their ATMs, and they do exist, by the way, go use them instead. This free markets, how about that? You get to do whatever you want. You can do your own research and find better competitors if they exist, right? But just because something is a profit center doesn't mean that it shouldn't be allowed to be a profit center. When I say that, what I'm talking about is it's a segment of their business where they can make a lot of money at a very low cost, probably close to zero for themselves. And let me give you, because look, I deal with this. I do. I sell stuff. I don't want to talk too much about my business specifically, but I have real world experience. And so, what businesses will do is they'll lose money somewhere to get customers, and then they'll make money elsewhere, and then it balances out. This is what happens. So, for instance, while you're talking about the greedy banks, charging you for the overdraft fees, which, by the way, you should probably just be more responsible, because when you sign up with them, if that's their policy, that's the policy. But even outside of that, the greedy banks are making all of this money, billions of dollars per year, from the overdraft and from the ATMs. Well, what about the fact that they'll give you a checking account for free? I don't know how this is where you live, but where I live, I'm in the Midwest in the United States. I can go to any bank where I live, and I can set up a brand new account for free. Now, you do understand that when they're setting that up, that's not free to them. I'm taking up their employees' time, and they're paying their employees' salaries or hourly wages. And there could be other costs associated with it that I wouldn't be aware of because I'm not in the industry, but it's not free for them. Well, how? You're taking advantage of them. Oh my gosh, they're losing money just by you setting up the account. Look at that. So what do you know? And so what happens in business, and I do this too, I will, and this is just how a lot of industries are like this. If, in my industry specifically, there are certain products that customers look at and they want a very good price, or they're not going to do business with you. And so what happens is these products become what are known as loss leaders. That just means that companies within my industry are selling them below their cost, so that you can acquire the customer, but you still have to make money somewhere else. And so then there are other products that don't look as shiny to the customer, if you will, and then you make margin there. And those products, it's big margin, but then when you look across the board, it kind of evens out. And so all the competitive forces play out, and it's like that from industry to industry to industry to industry in the United States, because that's capitalism. And things just balance out. This is how it works, guys. That's it. And so if you were to ban all of these evil fees, oh my gosh, the bank's making so much money from the overdraft fees. Even if you made that illegal, which I think is stupid, because then you're just telling a consumer and a business you're not allowed to have this particular relationship, even though you both agree to it, that's bad enough. But if you did that, you know what would happen? Prices would go up somewhere else. That's exactly what would happen. In my industry, I know exactly what it would do to me. If you're saying I can't make the big margin on this, even though my competitors are too, if none of us can make that anymore, what do you know? Free markets are going to react. And then something that maybe was used as a loss leader, maybe you still lose a little bit of money, maybe you lose a little bit less money, or maybe you finally break even, or maybe you finally turn a small profit. But that's just government intervention and manipulation at that point, rather than free markets, consumers and businesses deciding what they're willing to do. Whose business is it in the federal government to say what willing participants in a free economy can do? That doesn't make a damn bit of sense. And so here you go, a senator that doesn't understand something as simple as competitive and free markets. And so I had to just break that down, because it was really grinding my gears just hearing it. Again, I'm living through this on a daily basis, and there's nothing wrong with it. I can't force customers to buy from me. And yeah, that's just how, and frankly, anybody that doesn't have business experience, maybe she legitimately doesn't know, but that's still kind of scary. Like, somebody should have told her these ideas don't make sense. And then she said something about how there's these financial institutions, big banks, they're restricting financial access to consumers. Well, look, I'm not aware of any class of people, at least in where I live in the United States, that doesn't have access, like financial access. There could be anecdotal instances where bad things happen, and we could all probably rally together and say, okay, that's not right. I mean, for instance, something that just popped in my head was like David Schwartz, Ripple CTO, who is co-creator of the XRP Ledger. He is, I don't remember the whole story, and I wouldn't want to spout it off right now anyway, but he's banned for life from PayPal. I kid you not. And I really can't remember the story, but I remember thinking, wow, this is absurd. Like, the fact that happened to him and the ridiculousness around it. And so, like, if a platform like that becomes ubiquitous, it's like, what do you do? But the good news is, at this point, in terms of financial services, there are enough that I'm not seeing anybody that's not able to participate if they want to. So I don't functionally know what she's talking about. And then this idea of gobbling up smaller competitors, this is the problem with the legacy financial system. This is how she views it, mind you. And I'm going to tell you that this is not how I view this. I'll tell you, there are problems with the financial system, and I'll cite them. But that's the reason I wanted to break this part down, because these ideas are so wrong, I couldn't just leave them untouched. But this idea that these big banks, they gobble up smaller competitors until these banks become too big to fail. Well, first of all, I'm against the idea of too big to fail. If something is too big to fail, then I say let it actually fail. Don't even call it that. No, it's just really big and it's going to fail now if it's failing. and it can be painful, but what happens if you prop it up and you keep the same idiots in place that are running it in the first place? Do you think something's going to change? Does that sound smart? I sure as hell don't think so. So whatever the institution is, let it fail. Like, markets will figure it out. Like, life is messy sometimes, but not fixing the problem and then just giving more money to the people that screwed up, that doesn't sound logical in the least to me, right? It just doesn't. And so also consider that most banks and financial institutions and remittance companies, they're small. It is not the case. Look, how many big banks could you name off the top of your head? I mean, I'd be impressed if you could name like half a dozen. If you could name a dozen, that's baller. 2 dozen? Could you? Could you actually? I bet almost none of you listening could, which would make you normal. Or maybe you're in the banking industry and you could, though. Maybe you could. But there are over 11,000 banks on the planet. They're mostly small. There is clearly not some sort of epidemic of small banks getting gobbled up into these big things, and you only have like 3 choices. That is not what's happening in real life. And so what she's citing as the problem here is not in line with reality. But there actually are problems, and we should be talking about those, and crypto can help them, and XRP specifically can be positioned as a bridge currency to fix some of this stuff. Because the legacy financial system, for so many reasons I've cited on this channel before, there's a lot of friction, and it is very slow. And you have a company like Ripple come along, and they were even just fixing the payment side before they even introduced XRP as a bridge currency. And so, yeah, you can talk about those types of things as a problem. But as far as banks too big to fail and unjustly charging fees and restricting classes of people from gaining financial access in the United States, I don't see it. I just don't see it. And now, if you could cite those types of things as factually being true, I would love to have an in-depth conversation, but it's not in line with reality. It just isn't the case. And so Senator Warren understands that cryptocurrencies offer decentralization, which means the interests of the greater good, so to speak, are in mind. The greater of good, when I say that, within the decentralized system, that's what it actually means, though. But she says that sounds good to hear her, basically in theory, though, but in practice, it doesn't work, she says. She notes that in decentralized systems, there are various participants that have differing motivating factors. Like miners, for example, they're stakeholders within the system. Some people don't like to call them that, but they are. Miners, in proof-of-work systems, they have different incentives than people that want to transact on the network. They want higher fees. People that want to transact on the network, they'd prefer lower fees. These things are at odds against one another. But hey, it's one of the problems with the proof-of-work system. Then you have the XRP ledger where you actually don't have that. Because as David Schwartz has artfully stated, the best incentive is no incentive. And when he says that, he's talking about consensus. You don't need to mine crypto to have cryptos that work. You don't. And so as a result of this, though, she says that the trade-off from centralization to decentralization doesn't make sense. But so a couple things here. As far as the nature of decentralized systems, they're only decentralized insofar as those participants that choose to operate within these closed systems, they're there by choice, and they all agree they want to be there because they're okay with the rules and they find utility, or whatever their reason is. But you all have to play by the same rules that are coded in. So when something's decentralized, it's only decentralized insofar as here's the rules, we're all playing by the rules. That's effectively it, right? And so I'm not confident that she sufficiently understands that. I don't think it's the case that you're ever going to see the centralized financial systems ever completely replaced. Like this utopia that some of these early Bitcoiners had, like it's never going to happen, folks. And I don't think it should. I'm not a down with the banks. I'm not a down with the government guy. Not at all. I don't like that. It's unsophisticated and silly. It's never going to happen, nor should it. Governments the world over, like, they're not going to give up their monetary sovereignty. Do you really think that the United States government is ever going to give up the ability to print more money, for example, or to roll back transactions? And so that's why even if they launch a United States dollar central bank digital currency, they'll still be able to do those things. It doesn't change the monetary policy. That's not going away. And even if we didn't have all these technological hurdles that we do with Bitcoin, like it's slow and it's clunky and it uses a ton of energy, even anything that, the fees associated with it, even if those didn't exist, and even if you had your magical world where Bitcoin is the utopia and nothing else is used as money, what do you think would actually happen? Have you played out this thought exercise before, little Bitcoin maxis out there? Because the reality of the situation is, if the government can't print more dollars because fiat currency no longer exists and it's just Bitcoin, and it's just a thought exercise, but if that were the case, you know what they would do? They'd tax the hell out of you. If they can't print more, they'll just increase taxes, because understand, when they're printing money, it's tantamount to a tax anyway. It has the same effect, right? Because it affects supply and demand of dollars within the marketplace. And so if you're not printing dollars anymore, you're just going to sufficiently tax, and then they'll have their Bitcoin, and they'll still have the same control. Now, I get it. They can't hijack it from your account if you've got your private key, this and that, but it doesn't mean they can't have policies in place that wouldn't severely impact the way that it's actually treated, and I still don't think that most people would want to custody crypto themselves. I really don't think people want to take on that risk. I mean, you make one mistake and it's gone. Like, I think people like the idea of having their having, like, for instance, with the FDIC, like in the United States, your checking account and I believe saving accounts too, insured up to $250,000, like stuff like that. There are safeguards, right? It wouldn't be, I don't think people want to give up some of those safeguards, and the people that do want to give them up, I like the idea of them being able to say, no, I want to have, like, if you're the type of person, and this is rare, but if you want to be like this and say, no, I'm not even going to write down my private key, I'm going to memorize it, and if I forget it, fine, I forget it. Some people would want to do that, and I say more power to you, fine. That's kind of a risk. I hope you don't forget part of your 24-word private key if you're using a hardware wallet, with Ledger or something like that. But I like the idea that people get to choose stuff like that. But crypto, it's not going to replace a centralized system. It's not going to. Now, it doesn't mean that it can't threat the system. I'm just talking about in terms of replacing it. But this is a very complex conversation. At some point, I'm just going to have to cut off my thought process here. It's like a stream of consciousness. I've just thought through all of this so many times, though. You could have a situation, I'll acknowledge this before moving on. Like, you can have a situation where maybe the United States dollar is just so debased because it is being printed into oblivion, and in the decades to come, at some point, maybe a cryptocurrency or cryptocurrencies could replace the dollar in theory as a global reserve, and then that would have geopolitical implications, and that actually is true. But in terms of the flow of money and some of these other stuff, it's not as big of a factor. And so if you just have both options available, which is the perfectly reasonable way to approach all of this, that's good. Now, there's still a lot of stuff that needs to be figured out, but gosh, there are a lot of ways that centralized and decentralized systems actually can work in tandem right now. Like right here, right now, today. In fact, the most obvious one, XRP is a bridge currency. Well, how about that? And so Senator Warren, she does want crypto to be regulated, and she recognizes that it's not sufficiently regulated today. And I acknowledge that. Like, I don't think there's sufficient clarity. Certainly, if you think about SEC and what they're doing and going after Ripple, we would agree on that specifically. And so it might sound good on the surface. Oh, she wants regulation. Well, I want thoughtful regulation, right? However, it seems very clear that she is not a fan of cryptocurrencies. So does she genuinely want thoughtful regulation, or does she want tough laws that would squander the promise of cryptocurrencies? I'd be willing to bet it's closer to the latter, frankly. But she said at the end of her remarks that as the crypto asset class continues to grow, it introduces an increased risk to our existing financial system. Well, for the United States, the global reserve, in theory it could, over a very long period of time. It would take a long time for that to happen, I suspect, though. And that threat would only exist here, right, where I live. Because, there's one global reserve, right? So other than that, though, I mean, if you're talking about nefarious activities, this and that, that's been debunked so many times. I don't even want to talk about that in this video. Yes, there are nefarious actors, and you can take advantage of any good technology and use it for bad. Yes, that is true. It doesn't mean you get rid of the technology, though. You have law and then law and order, and just you enforce it. Like, that's it, to the best that you can. And that's going to have to be good enough because, we're not all living in padded rooms. The world is not without risk. That is most certainly true here. And so I am glad I share Brad's thoughts in terms of it's very good to see that there's open discussion about this. It's being taken very seriously. It's very clear that crypto is not going away. And it's also good to see that not every employee on a federal level, not every senator out there is anti-crypto or trying to hinder the adoption of and fight against it. That's not the case. It happens to be the case with Senator Warren. That's what it looks like to me for sure right now. But that is progress. That is good. So there still is a lot to figure out here, but my gosh, there's just so much promise with all this and so many business models that can exist that otherwise could not exist. You don't want to just kick that to the curb here. So regulate it, yes, but with thoughtful regulation, make the rules clear, and then let's move forward. And so I guess I'll go ahead and wrap it up there. And my one Christmas wish is that Senator Warren learns about competitive and free markets one day. That would be my Christmas wish. I'll wrap up there. I am not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.